Are economic storm clouds clearing? Do we have vision of the stars to help us chart that course to potentially economic prosperity, not just for the multifamily industry, but for the general global economy, especially here in the United States? Well, maybe we have a little bit more clarity, but the rest is still unwritten. Today on the Gray Report, we've got a great slate of research reports and articles to try to help us understand where we are in this market, specifically looking at multifamily, but also we're going to be looking at other types of housing, commercial real estate, with a lens for the macroeconomy. From CBRE, we're looking at the first half of 2024 cap rate survey, trying to see, again, this survey was took place before the drop in rates, but where are commercial real estate cap rates heading? And then from Fannie Mae, giving us their mid-year 2024 mid-year outlook. And then contrasting from the episode last week, looking at the Kamala Harris, the proposed agenda and policy framework related to housing. We're going to be looking at the Trump campaign's plans for housing, looking at how they're same, how they are different, and will any of this actually be implemented? Strap in. We've got a great episode. So if you're an active investor, passive, any way interested in the multifamily industry, it's a great show. Best place to be, where we're breaking down all the latest research reports, data, and giving out some original opinions. I'm joined by Director of Communications and Marketing here at Gray Capital, Dr. Matt Bosnagel. Strap in. We've got a great episode. Let's go. Welcome back to the report. Matt, how you doing this
Pretty good.
week?
Pretty well.
Good. I'm glad.
Yeah.
Cap rates, United States. Cap rates, capitalization rates, as they go up, prices go down.
Yep.
As cap rates go down, prices go up. There's an inverse correlation there. Obviously, cap rates, you take the net operating income divided by at the property divided by the cap rate gives you your value, but you can do the inverse to solve for any of one of those variables. Where are cap rates, Matt? This is how properties are valued, commercial real estate assets. And they've risen since they bottomed out in 2022. There's been a lot of uncertainty surrounding where prices are. This whole idea of price discovery being relatively frozen recently because there was a big bid gap spread, or a spread between buyers and sellers. Sellers wanted high prices. They wanted to see those low cap rates of 2022 that were even below, not just below 5%, some below 4%. Buyers seeing high interest rates cannot make sense of those low cap rates. They need to see a higher capitalization rate because the interest payment, the debt, the cost of the debt, much higher. Equity harder to find. Something's got to give. Matt, where are we at according to CBRE in terms of cap rates?
I think you summarized a really good setup for this. It was slow, but things are starting to get a little bit more active. I don't know if this is in like wishful thinking or trying to kind of will it to happen, but I have noticed a lot more articles that are calling for the bottom of the market or a ceiling for cap rates. The data, when it comes to this survey, is supporting that. So that's good news. Not only are people, hopefully wishing there as at least through a survey, this idea is more commonly held than maybe like a single opinion writer. This cap rate survey is from last month, but there is little to suggest that the numbers here really have deviated from the course that's outlined here. I think that course is to put a fine point on it. It's cap rate compression. This expectation from investors and experts surveyed here is that commercial real estate caps will decrease or at the very least not increase. Frustratingly, this report doesn't give specific numbers on how much respondents think that cap rates will rise or fall, and instead they aggregate all answers by property type and display the results as a fraction of responses expecting further yield increases. This quarter, the most common response across all categories was no change. So it's not as if people think that cap rates are going to decrease or values increase. That is, they just think that things are going to be steady. I do think, though, that the dramatic drop in expectations for further cap rate increases can be interpreted can't be interpreted as a sign that cap rates are expected to go down. I don't think that that's unreasonable by any means. I think that the respondents, sure, the majority said that cap rates would stay the same, but what about the second, the second most amount of people?
Yeah.
Was it people that think that cap rates would go down or up? I think that a lot of people are thinking that they're going to go down. That a lot of people are thinking that these buildings are going to be more valuable. For multifamily specifically, a little over 20% were expecting cap rates to increase when they were asked 6 months ago. Today, that number is about 8%. So that's great. And it's funny, there's an outlier. The only outlier here in terms of expectations for cap rates compressing is hotels. Hotels, the only CRE sector in which survey respondents actually predicted a greater change of cap rate increases. But again, the overall opinion.
Interesting. Do you know why that is?
No, I don't. I there are probably some specific dynamics. I have not been watching the tourist market. I have not been reading CBRE's State of the Union on hotels that they release every single month. But
there's a lot to cover. There's a lot to cover.
Yeah. But again, retail, industrial, office, they're all, even office, they're expecting some cap rate compression or less chance of cap rate increases. Sorry, to be precise here.
Well, I think that, there's not further declines in pricing and an increase in cap rates, I think is noteworthy. I think that there's some argument, and people would say that cap rates have even probably started to compressing. I think that we looked at a survey 2 weeks ago that would show that cap rates have actually started ticking down a little bit. It was just a month over month. Taking a look at data, maybe a little bit more transient, not enough data, but most certainly are saying that prices are certainly not continuing to decline. Now, I think, could there be further declines? Something else would need to happen. I think everything is people are absorbing the information surrounding all of the new supply that's coming online and seeing relatively high absorption rates for multifamily. And that, we're seeing about a 50-year peak in new supply coming online and the resilience and the demand in the multifamily industry. I think that's giving some confidence to some folks. Yeah. I think also this is more in the last couple of weeks, but I think interest rates coming down, I think was a breath of fresh air. And this reality that the wall of loan maturities has been effectively kind of been spread out. To the wall's been taken down, it's been spread out. The can has been effectively extended pretend as a strategy was
That's
very
funny.
effective.
That's what I titled the newsletter. I was like, looks like multifamily will survive until 25.
Yeah.
With this near certainty of cap rate or of interest rate decreases, some people are going to get spared. That's fine.
Yeah. All is good. And so I think it's just giving a little bit more confidence to the economy, but specifically the multifamily market that, okay, there's not, because even as early as or as recently as, a couple weeks ago, I was still seeing calls for, the next shoe to drop, but or in prices to decline. But so many of those calls seem to be out of time a little bit. Yeah. And because I kept having to look at it and say, well, the prices have already declined by 15 to 30%.
Out of time is a good way of putting it. That was another, it's kind of a sub theme of this and it's a story that I'll repeat later in depth, but it's like the snapshot versus looking at where the trends are. So you can look at right now and it may not look as great, but if you look at where things have been and where things are going, the trends are more positive than you may assume them to be.
I think we are absorbing this information in others, but I know you and I are absorbing this on a higher frequency basis than some, just because we do the Gray Report every single week. Never Not Done episode of the Gray Report, and we put we put 2 newsletters together every single week of updating this information. And so when I hear somebody say like I could see some major declines in commercial real estate and multifamily, like the ones are you speaking of the ones that we've already seen, or are you suggesting that we'll see price declines of another 20%? Do you believe that multifamily will decline, by like over 40 to 50%, from the peak? Yeah. And what data are you pointing at to support that? Yeah. Because people are refinancing, people are having to bring cash to the table to close. People are using, this rescue capital. There's preferred equity out there. that is being used. Not that there isn't all the pain is behind us, and some of these deals will still end up not working out that well. But generally, effectively, we have been able to, pass the buck on, kick it down the road a little bit. And I just don't, with the strong performance of the fundamentals in the face of high supply, it's just giving that renewed confidence that it's a great asset class to be in.
Yeah.
And has really set a floor in pricing. Yeah. Cemented with the major transactions from Blackstone and KKR. I think that was in my mind, that was like the major support beam in the industry of like, all right, there's good fundamentals to point to, but all right, serious money, serious investment, and a lot of it.
Yeah,
there's a bid. There's some pricing information to point at of saying, okay, no, we're going to settle here, and probably sooner than we realize. And I talked about this last week, Matt, but I'm just, again, anecdotally, and it's all since I think interest rates have come down a little bit. But I'm seeing more buyers in the market getting more aggressive.
Oh yeah. Well, I was just searching there, just like it's on here somewhere. I just couldn't find it. About the bid-ask spread. The bid-ask spread is now
I think I showed
is now smaller than. Oh, there it is. I just skimmed over it. Now this is a chart of the bid-ask spread that is equally confusing as the one in which it was a percentage of people who think it's raising. Well, okay. Well, the bigger the graph bar is, the smaller the bid-ask spread is. Do you get it?
I mean,
I think they did it as a joke. I don't know. No, they didn't, but that's fine.
Yeah, 1 equals widest bid-ask spread. Okay.
So that means that the office has the widest bid-ask spread. So I'm guessing they're asking survey respondents rank from 1 to 2 rank from 0 to 4 and 4 is the smallest bid-ask spread and 0 is the widest. An office right now is a little under 2
because there's some office owners who are like, no, it's still in a great location,
yeah.
And someone's like, I will pay you 3 cents on the dollar.
If anything, this seems like a little bit like skewed towards a smaller bid-ask spread. Right now, I would think that, so for instance, multifamily and industrial are about like 3.75 out of 4, which is like...
It's getting tight.
Which means that they're tighter than 3/4 of the other market. So that's kind of what I wanted to say in general here is, I mean, not really making fun of the graph.
We went from there only being, back in 2022, there might be 25 offers and bids on a Class A property to 6 months ago there may be 3 or 4, and all that 3 or 4 are all 10% below what the whisper price is. Now we're seeing again maybe not 25, but we're seeing maybe 10 folks bidding plus or minus, and it's coming in at ask and maybe even over ask, because I think that brokers have adjusted down, and now I think they're going to start readjusting up. I think for really high quality assets, new construction, there's going to be a ton of institutional competition. I think it's still a challenge for large deals where the equity raise is going to be like $20 million plus, maybe $15 million. Type of stuff that we've been doing here at Great Capital, but part of the reasons is those are the opportunities where the field has been thinned a little bit, and folks just aren't as confident on the equity raise. But there's going to be a big opportunity with some serious cash coming off the sidelines to pick up some institutional quality assets at a deep discount, because everybody kind of knows where prices were a couple of years ago, and you can kind of discount that information of like, that's not the price today. Very true. But it could be a little bit of an indication of where we might recover to in the not so distant future. And man, there are some just incredible value opportunities to get, but you might have to take a little bit lower cash flow. And I think I see some underwriters struggle with this is for understandable reasons, but we're a little bit gun shy because of the weak performance and fundamentals of last year. Occupancy was low,
and CBR actually notes that. It's like we've been in this extended period of high elevated expenses that hasn't really ended, and it's hard to tell. Like, well,
people are underwriting further inflated expenses, which maybe we'll get, but if inflation is going to be at 2%. And everyone switched their model. A couple of years ago, I was like, we need to switch our models from 2% to 3% inflation. Now it's like you need to go back, otherwise you're going to be getting lower returns on your underwrites, and also on the rent growth. It's like everyone's like, well, I'm not putting in any rent growth then, or 3% rent growth, which it may be very appropriate, depending on what the data says.
Yeah.
But it's like supply. If you're in a market where you're seeing 3% rent growth today at 50-year peak supply, do you think rent growth goes up or down when supply goes down to 2013 levels, which would be like a 50-year low?
Yeah, I think it is just that contrast between how far apart it was 6 months ago, how close it is now. It means that the buyer and the seller are coming together. There's so much more confidence, and this wasn't even at a point where we had such a certainty about interest rates decreasing in this coming September. So that's really great with this clear view. That means that we're going to get more investment, and that's something that investors have looked at and have noticed clearly in the survey, and I'm sure increasingly throughout August. More and more investors have become, more favorable about investing in CRE, and that's something that Fannie Mae actually noted in their
Well, enough of the surveys, Matt. Now let's move on to the commentary. Commentary from Fannie Mae, multifamily economic and market commentary for August 2024. Now I got a little bone to pick with the Fannie Mae. We're supposed to be closing on a deal today, but their legal team, Fannie Mae and Troutman, legal team. Hope you're listening. Love everybody, but
this is going to go. I'm going to at them on LinkedIn. Hopefully.
But they've had some of our docs for over a month.
Fannie. Okay. Fannie.
Loan modification docs.
Yeah.
We're supposed to close today. Yesterday, they tell us, we haven't even looked at them yet.
They got a backlog. Man.
What do you know about volumes this year?
How long?
I guess it's good enough for government work.
How long does it take? That's so it must take like half.
Well, they're going to do it in a couple hours, so it doesn't take that long. It could have been done, it's because it finally got shuffled to somebody's desk, and it's like we're working with the freaking post office, pushing paper. And you got to make another appointment to come back because you need your third form of ID, but you brought everything. And then it's like you sat there for 3 months, and then they go through, and they're like, you're good. And then they're getting ready to give you your driver's license.
Yeah.
And they're like, oh, yeah, we needed... And, like, you've gone home a couple times back and forth, and you're like, do I need anything else?
Yeah.
I'll bring it. And they're like, no, you're good. And then you get there, and then you're like, oh, well, now that I'm looking at this, actually...
You've got to have your pay stubs. Or
you're going to need one more thing.
Yeah.
And
it just makes me wish that you could just go up to their office and then like, no, I'll just wait here while you finish it. Don't give me a month where you want to email you back. I'll drive to your office.
Is Mr. May available?
Yeah.
Can I please?
Misfit Fannie.
Yeah, get Fannie down here and Mr. May.
Yeah. That's right.
No, no, Fannie, get it together, so we can close. But anyway, we'll listen to your commentary.
Yeah, they've got pretty good commentary. I have to say.
Yeah, about
the departments are different.
Office. Anyway, good enough for government work, Matt. What does Fannie Mae? What do they think?
So, they're much as your entrance here into the Gray Report, they know that the skies remain cloudy for the multifamily market, and this is a good excuse to really reorient ourselves and maybe some introspection, because it seems like we've been telling the same story for about 2 years already.
Man, while they were putting this nice commentary together, they really could have been reviewing our loan modification.
Man. All hands on deck. You, researcher, you're on the Gray file.
I need a warm body. I just need a warm body.
You just got to stamp it. That's right.
Please continue, Matt.
Yeah. So, no, and it's this same story. It's this idea of what I said before. The multifamily snapshot doesn't look great, but the future looks promising for investors.
And what does that mean? Tell us what that means.
It means that, according to the trends, particularly the supply trends, it meant for the past year and a half, 2 years, we were looking at a situation in which rent growth was shrinking, in which expense growth was growing, and yet at the same time there was never a complete cynicism or pessimism among investors. Investors still saw a future, still saw a finite end to the supply wave, and they also found they had hope for further rent growth. They thought that maybe expense growth would go down, like we said, maybe inflation's going down, maybe expense growth will go down, and ultimately the fundamentals of apartment demand and housing demand as greater than any of these things that we've listed. That's kind of fueling this long-term thing. Now, that's been a story forever. And I wonder, of course, how long have we been saying this? Maybe 1.5, 2 years. But what is different? I'll argue that these skies that are cloudy, these aren't the same clouds. Maybe the same weather pattern, but they're not the same clouds. We're in a different part of this weather pattern, different part of this story that's been happening. And what has been happening is, as we've progressed, it went from, oh man, we are facing the greatest surge of apartment supply that we've seen in a generation, and now we're kind of on the other side of it. We are just past the crest of the wave of this apartment supply, whereas at any point in those 2 years before, we were still struggling. We could see the end, but it was a long time coming. Now it is clear that not only are we going to see an end to this apartment supply, we're going to see an end to a high interest rate environment. And all throughout, even during the darkest moments of for multifamily investors, you could take solace in the fact that housing demand at never really dipped down. There still is housing demand, and as this report notes, specifically apartment demand, there's some promising demographics. For over the next 10 years, we may have a solid supply of elevated apartment demand. Solid supply of demand? Well, yeah. A solid supply of renters, that is, people in peak renting years over the next 10 years.
So, Matt, on just comparing the Fannie Mae commentary with the CBRE survey, one thing just to note is, they're saying that, multifamily property values still declining, and they're using MSCI data for this. Now, MSCI on the most updated survey that we covered here on the Gray Report not too long ago actually showed that cap rates were starting to decline a little bit after kind of flattening out. I'm curious if they're looking, if some of this data is a little bit kind of looking in the rearview mirror a little bit. That was also like very high frequency 1 month of data, so maybe they're just kind of discounting it.
How long did it take them? Is it taking them to process our documents at Gray Report? This is probably a very old data. Maybe they started this 4 months ago, because it does seem like the latest month that they have here is March 2024. So they're maybe a few months late when it comes to the real-time data here.
I think that's exactly right, Matt, that it is just good enough for government work.
It's good work, but it's... Listen, you can have fast, you can have good.
Yeah. But it's interesting here, on some of the rent growth forecasts and even cap rate forecasts, going back here, they're basically saying that we're going to get back to an organic rent growth level that's higher than really the 4 years prior to the pandemic. Really not a level had not seen since a peak in 2015. And they're showing that essentially going to level off around 4%, seeing a lot of demand for apartments with limited supply. Really, that growth should kind of kick off sometime into 2025, according to them, and really a convergence across A, B, and C classes. And then also, Matt, on cap rates, on their forecast, if I can, there we go. They've got a base case of downside and a severe downside. But their basic assumption is that, we're going to be on a little march downward in cap rates, with a projection of cap rates being, at 5% or below, sometime kind of in the 26, 27 time frame. Yeah. My gut is that we're going to be at 5 caps for an A-class property today or next week. We're already there. I believe in a good market, good location, Class A, you're in the 5. Now, what the challenge is 5 cap rates. There's a time component. Are you taking that? Because again, the way that cap rates are calculated is you take the net operating income of the property itself. That's your main variable. So net operating income. How are you going to calculate that? Do you have a couple different options? The most traditional way is using the last 12 months of financials, taking just 12 months, P&L statement. What's your net operating income? But a lot of folks, what they'll do is for good and bad reasons, is sometimes, if you say, hey, we had a problem with the property a year ago. It took us 6 months to figure it out, and the property's performing incredibly today. We've increased rents by 20%. We've reduced expenses.
Yeah.
So, if you buy it on a T12, you're going to have a blend of that performance. Now, as a seller, I'm going to say, yeah, no. But you're not buying, because when you're buying commercial real estate, you're buying an income stream.
Yeah.
You're buying a piece of property, you're buying an income stream. They're saying you're not buying that income stream. You're not buying a year ago's income stream. You're buying this last 6 months.
Yeah.
And that's going to continue forever.
Was it like the summer months, spring and summer, or was
that's the thing. So like a lot of brokers, real estate brokers, they'll give you cap rates relative to on the T3 or T1,
right? And like peak renting season,
because on a T1, it's like, hey, look, we've had our best month of all time, and we think we're going to keep growing here. And if you put a cap rate on that, all of a sudden it's a 6.25.
Yeah.
But if you take the whole year, it's 4.97.
Yeah.
And so you have to ask yourself, is this an anomaly? Or are we just hitting peak, occupancy, peak renting season, and then it's going to be all downhill, and maybe I'll get back to there eventually over time, but it's going to take years to actually get a full year of that type of income.
Yeah.
Sometimes you want to mess with like what the T12 is, because expenses, you might use like T3 income and T12 expenses.
And you might be able to adjust it seasonally. Like, okay, I know it's the winter months on these in here, and we can figure that out. And,
that's why a lot of times they'll do like, all right, T3 income, but T12 expenses.
Okay.
So it captures all of the ups and downs on the expense side, and maybe there hasn't been as much annual variability on the expense side, but like the story here is on the incomes. So what I'm saying is that there's a lot of different ways to calculate.
I do think it's interesting.
Cap rates.
This cap rate forecast does seem, the way it's kind of stair steps down. It's like, well, they expect a rate cut here and here and here and here. Now, what I would say is there's probably going to be more excitement on the first few jumps than the following ones as people see this trajectory.
I think that's a really good point, Matt. Now, like that, I think there probably will be a nice push down, and then like the slow crunch and compression. But we shall see. Only time will tell.
And even apart from, so we're looking at their forward things, and again, the report was very much like a snapshot versus the future, and their snapshot did talk about how vacancy is expected to grow through the end of the year, how concessions are inching up, but there was some promise. And one of the most interesting things that I've noted here, just referenced before, is the demographic picture, and it is I'll just give the quote here. It says, as seen in the chart below, the size of the nation's 20 to 34-year-old cohort is expected to remain elevated over the longer-term forecast. That is a very favorable trend for the multifamily sector in terms of ongoing demand, since this group of people is most likely to rent a multifamily unit. Many multifamily investors are aware of this trend and continue to show interest in the sector. And that's where it does seem like I'm telling the same story for 2 years, but I do think that people are listening. It's just very sharp. It's a very sharp contrast between the people that are in the industry and out of the industry. The people that are out of the industry maybe telling the story of 2 years ago. But there are people that are very much aware of this. There are people that are very much aware of the idea that maybe cap rates have peaked, maybe values have bottomed, and they're on the way up. As paradoxical as it looks, it's because people are not looking at the cloudy sky snapshot. They are looking at the forecast for sunny days ahead.
And not to say that we had a crystal ball or anything. Although, man, I did think it would be interesting for the show if we did get a crystal ball in here, just for fun.
Yeah.
But
the magic.
What were we talking about 6 months ago, Matt?
It was very similar.
We were talking about how if you want to get good multifamily assets at good prices, you better buy them now, because prices are going up. Right around the corner. And you better do it before they hint at lowering interest rates.
Yeah.
And what happened? Well, it was hinted at.
That's good. That's a good point, because I kept
run the tape.
As I was writing the notes and as I'm talking about it now, I keep thinking, all right, what has been different? And we've outlined things that are different. The certainty of the interest rate cut is a lot clearer. We're on the other side of the housing supply, and so there's so many things, and we have been tracking it as much as it has felt like we were saying the same story. Back then we were saying, hey, it's going to happen. 2 weeks ago it's like it's happening, and then today we say it's happened. Yeah. So this is where it's going, and it may seem like, I'm sure in 2 months from now, we'll read some Wall Street Journal articles and New York Times articles saying, hey, it's possible that the multifamily market could really start to take off. Who knows? And by then it'll be too late.
Yeah. I think we got to get through one or two more of how it might crash, and then
that's true. That's a good point.
Really, 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 really behind. Okay. So last week on this program, we talked a lot about the Harris campaign's policy proposals relative to housing, because it made major news across all media about, there have been no real kind of policy proposals from Kamala Harris, who I think is probably going to be president. Not saying anything.
It's a toss up of all toss ups, it seems.
Yeah, but it's such a vibe right now, and vibes are winning and memes are winning, and similar to how Trump was elected, of just that feeling. I think that the people are so just fed up with politics, and and they were so just frustrated with the choices between Biden and Trump that she is just not Biden and Trump, even though she.
I'll tell you one thing.
But she's just somebody different.
Yeah.
People are excited about something different.
I'll tell you one thing. The Harris policies for housing do seem a little more real. They're a little more detailed than
they also
kind
of copied half of whatever the Biden administration had been working on.
Yeah.
And they were this is because they'd obviously been working on this as a part of whatever. Yeah. I think the Harris campaign, they were able to basically copy and paste the Biden administration plan they've been working on, tweak a little bit, put their spin on it.
Very good point.
Because they knew I have not seen a specific article about this, but I'm confident what happened is that over the last year and a half, 2 years, as inflation has been a hot button issue. How are people talking about inflation hurting them? Oftentimes it's how high rent has become.
Yeah.
And housing affordability, I think, probably kept coming up in poll questions and surveys that they were doing, and they identified it as a really strong campaign issue for them of housing affordability and just housing policy, and at least mentioning that, hey, the rent is too damn high, screw the landlord. That is just an emotional piece that works.
Well, we've been following. It's I guess sadly, or depending on your perspective, it's a little bit gratifying that what we have been following for the last 4 years, or so on the Gray Report, this housing, the size of housing has only become a bigger part of the culture of the discussion of the economy, and there's this recognition of the force of housing as a concept in people's decision making. It's in the zeitgeist a lot more than I thought it would be, and this is coming from a guy that wrote his dissertation on housing and on the idea of the home. Well, the idea of the home's a huge part of what people are talking about right now, and I'm skipping ahead to my conclusion.
Just dissertation on the idea of the home?
Yeah.
Oh, that's cool.
Well,
you have to share it.
All right, I will. I'll send a link. Yikes. But I'm skipping ahead to the conclusion because I think that it really does sum up the thought of how this is operating within this political race right now. The Trump administration may not have as critical of a stance against certain aspects of the housing industry as compared to the Harris campaign. But again, it does represent the fact this is being talked about represents how massive a force housing is. The force of housing was arguably stronger than the economic disruption that we've experienced. And there is, whether it's, I know the Harris has been a little bit more detailed in her policy, and she's borrowing from Biden, but there is a very big opportunity, I think, for the Trump campaign there's a clear opening for a larger discussion and a larger response from the Republicans to some of the detailed proposals of the Harris campaign. So whether or not they choose to mention that, that's fine. And there is clearly a Republican angle on housing. And I would be interested to see what they where they would lean. Are they going to include some of this like this $25,000 first-time home buyer tax credit? Is that going to be part of the Republican plan or not? Or are they going to be, more supply side? There's a number of Trump-related policies that they do review in this Biz Now article, but in some, I think there's an opening, and they
do a little bit more work.
Yeah.
It's interesting the overlap on. I think some of the ideological again barriers have been lifted in form of populism because there's a lot of crossover on the little policy details from both campaigns. There's a couple that are standing out, like on the eliminating tax.
I thought
for service workers. The idea of expanding the child tax credit.
If they limit tax for tips, pay everyone as tips.
Tip everybody.
Yeah, tip everyone.
Yeah. Everybody become a service worker. Does that mean you can give me a coffee and stuff, everybody? You have to
week by week it may change, but we're not getting taxed on it. So.
Yeah, be like, hey, you got that report done on time, like.
That's good. But
I get that means I get the we get everybody gets like minimum wage.
I know. It is funny though.
You won't like it when you have to go and like get a loan.
But that was one of the criticisms was, well, could CEOs structure their pay as tips or something? And then that's the kind of chipping it away. And
but Democrats basically saying they're going to lower taxes, which is it's all good, and then Republicans, expanding, social programs, which might be good programs to expand, like the child tax credit. But
that's a good idea. That's a good point.
They're expanding,
there's strange intersections. And there's,
And so I think housing, where I'm getting at is I think housing is another opportunity where there's probably a lot of overlap, knowing more details on what the Democrats want in terms of, they want to build more. They want to, deregulate. They want to, ease zoning restrictions. All things that the Republicans should be able to hop right on board with. The Democrats will probably want to build more affordable housing maybe than the Republicans will want to build in terms of tax credit dollars. But at the same time, I don't think there's any wing that's a big opponent to kind of light tech, additional light tech funding. Maybe there is. But I think there's just so much overlap. And I'm just curious how much of this agreed upon policy proposals between the two parties actually happens.
I know.
So I'm like, okay, it sounds like we all agree here. Are we going to actually do any of it?
Yeah.
It should be pretty easy.
It's interesting some of the tools that come into play. One of the things that we didn't get a chance to talk about last week when we were talking about the Harris campaign was a Biden-Harris proposal. Now, this has not been talked about in Harris's language in her campaign, but if you wanted to, if you wanted to be dishonest, you would say, well, the Biden-Harris proposal for 5% rent caps on landlords that own 50 or more apartment units, that's something that was proposed in I think it was March of this year or July or something, just a few months ago. And in 2024, there was a, part of that administration. But what their enforcement mechanism seemed to be was this accelerated bonus depreciation. And that, aside from the rent cap itself, everyone was paying attention to the rent cap. But I wonder if this accelerated bonus appreciation will be a token that is used to to kind of crack down on landlords and stuff.
What is the Trump administration actually proposing to do with housing? Anything different from the Biden administration?
I'm glad you asked.
I assume they're not trying to rent control isn't part of it, but
he has discussed housing on the campaign trail, but his policy proposals are perhaps less clear. And that's something noted in the Biz Now article. The GOP's 2024 party platform does mention housing, just not nearly at the extent that the Harris one does. And here's the actual quote. It's the paragraph where they deal with it specifically. So it says, quote, "To help new homebuyers, Republicans will reduce mortgage rates by slashing inflation, open limited portions of federal lands to allow for new home construction, promote home ownership through tax incentives and support for first-time homebuyers, and cut unnecessary regulations that raise housing costs." So there are a set of these specific Trump-specific proposals. They're talking about federal lands. I
talked about that last week.
Yeah, I took another look at the federal lands, at a map of federal lands, and if we're talking about the Bureau of Land Management, there's really not a whole lot of land east of New Mexico. But if you're looking for a home near Salt Lake City or Las Vegas, maybe there's a chance conceivably.
Yeah, there's a lot. I mean, out west, there's a ton of land, but there's a ton of land out west generally.
But like we're talking about places like the Forest Service, I don't know, in the National Park Service, I don't really know if I want to take or how feasible it would be to take away land from that.
Well, it all depends on where it is. I mean, there's some probably forest land that's in near a metro that's fine because it's all over the place out west, but you can't build in the middle of nowhere. For nobody. Yeah. It's
just slimmer pickings. I don't think that the Department of Defense is going to give anyone up. Maybe the Fish and Wildlife Service is, but again, the majority of all of this land is not as conveniently located as you want it to be. So it's a tool, but maybe unless you're kind of creating it, like the billionaires are making that city in the middle of nowhere, maybe they can
in California.
Isn't that was I don't know where it is, somewhere out west. I'm sure maybe they can use some federal land for that, but that's you can't pick where the city goes. In other words,
it seems like not a great idea.
It's
not. The concept is fine. It's like, hey, the federal government has land, build there. Yeah. But for it to be like the first on the list, it's like, have we thought through this one?
Yeah, I know.
Is there any other ideas?
Because you look at the map though, was like, wow, that's a lot of land. But then you just have to spend a second to think about it.
It takes a second to think about it.
Yeah.
Okay.
So the next thing is getting lower mortgage rates after inflation goes down. I think that's a good idea. I think that they're
they're gonna, and because Trump and his campaign have talked about having more control over the Federal Reserve.
That's what I was thinking of too. It's like, well, maybe not through inflation, but your real lever is going to be like through a phone call. It's like, all right, let's get interest rates a little bit lower. We don't need the inflation for it.
And unlike, there's a fallacy that the Republicans are going to spend less than the Democrats. They might spend a little bit less, but there's going to be a lot of fiscal stimulus either party, Democrats or Republicans. It's all going to be around the margins, and so the best way to reduce inflation or the control that the government has over inflation would be to stop spending money and stop stimulating the economy through fiscal stimulus.
To put inflation in the housing, and it's a little bit of a circular logic. Could be like a little bit of a feedback loop, but
I mean it is. Yeah, if inflation is reduced, but the other driver of inflation has been housing. I still think, fine idea. Could use a little bit of a fleshing out. I think that among the other, even more than the federal lands one, I'd like to know a little bit more about how. Do you think that there's a 95-5 relationship between 5% of interested maybe voters are interested? Maybe it's 90. It doesn't matter. It's ratio. There's a handful of people who are really curious about the policy and what the plan is. Maybe it's 80-20. I don't know. Maybe it's 70-30. But pretty much everyone is just it's just all on vibes and feel. And I think that the Kamala campaign, they looked around, they were like, the economy can be doing whatever. It's all on vibes. It's it's vibe session. The Trump campaign, basically that's a vibe. They've got their own MAGA vibe. Let's just if everyone's just making decisions on vibe, let's just have our own vibe.
Speaking of vibes,
we need nothing.
I don't know what vibes were. Also, they had weird capitalization throughout the Republican Party platform that was is it an official thing? It's a little bit of vibe. It's like this aesthetic. There's an aesthetic. They're the low percentage of people that will actually download the Republican Party platform, and then an even lower percentage of that that are going to be hunting for policy specifications within that. So it's a fraction of a fraction, but still, I'm glad that they provide this, and like I said a week ago, I think it is to their benefit, to the Republicans' benefit, that they remain slightly vague on some of the policies, because that's harder to pin them down. You can't say have you thought about this unintended consequence? Blah blah blah, and you're really painting yourself into a corner if you get too specific.
Especially if the election's all on vibes.
Yeah, that's true.
Feels.
Yeah. Vibes are allergic to specifics.
It's only. Yeah. I mean, think when the Kamala Harris campaign came out with a little bit of their policies, it was a big negative for the campaign, and it was the first negative thing that people found or had that was legitimate, and. What's the incentive to do more? Yeah. Same reason why she's not doing interviews.
And maybe it's a fool's errand, but I do treat some of these communications, whether it's the comments that Kamala Harris made in Raleigh, North Carolina, or the words in the Republican platform, they are loaded with meaning. Like when they say, bringing down inflation, or when they talk about tax incentives and support for first-time home buyers, well, that could mean a larger specific policy where they're giving money and subsidies to people that are buying homes. It's just they know they don't want to get bogged down in the details, either to bore people or to straight up turn them off. But yeah, that's the other section of the Trump plan is this. I don't know how similar it would be to this Harris proposal for $25,000 incentive to first-time homebuyers, but that's the other one. And then, so
hey, Democrats give you free stuff. Republicans got free stuff. Everybody's you get a house. You get a house.
I know.
Everybody gets a house. You might not be able to afford the house.
So much as we did with the Harris-Biden administration's housing communications and extrapolating them to the Harris campaign, you can kind of look at the Trump White House and see what their policy proposals were, kind of what they did, and they weren't, they didn't have they were not gung ho on the housing issues as much as the attention is here, and that's not that people weren't really asking for it like they are now. But
True.
they did have some positions that people have extrapolated, especially in
they're going to privatize Fannie and Freddie was part of the plan.
Yeah, and that's interesting. That's not even noted
and all I can tell you is that they didn't get privatized, and
we're still waiting.
On Fannie.
Well,
I'm glad this is going to be posted after we close.
Yeah, that's great. Well, they did.
If not, Fannie.
Yeah. Well, some incentive.
Anyway, Matt.
I think they hold a lot of the cards in this situation.
Oh my God, too many.
But they did have, in addition to that, the talk of privatizing Fannie Mae and Freddie Mac, there was a policy protecting single-family owning zoning that was promoted by the Trump administration. And that doesn't seem quite as deregulatory as things could be. But again, this is based on comments and positions that Trump had in 2020, may not represent what things are now. And then obviously everything so much runs through the idea of immigration. That's a large plank of the Republican Party, large plank of the Trump campaign. And so there's, talk about how illegal immigration is, putting pressure on housing, and that's also there. So deal with that. You fix a lot of things. You fix your healthcare. You fix your education. You fix your money. Your eggs are going to be cheaper. You're going to be happier. The music that you like is going to be on the radio. All of this.
Less mariachi. Is that what you're saying?
I don't. I'm just saying everything is going to be better. I think that it is. I think there's a little bit room for gray area. I think there are more issues at work here, and housing in general could be, I think, maybe bigger than the issue of immigration. Now, you can blow me up in the comments if you want. I'm sure that's what's going to happen, but that's about it. When you're comparing the two, I think that again, to return to the conclusion that I bumped up to the beginning, there is a large opportunity for the Trump campaign to respond to the Harris campaign. I don't think that they would be constricted in their response. And as you mentioned too, the kind of move to populism, or at least the greater leeway and flexibility, I think, that of some of these housing positions have to, what's left wing and what's right wing, what's conservative and liberal is a little fuzzier when it comes to housing.
Who's the bigger NIMBY, the Democrat or Republican? I honestly could tell you, I can make an argument either way. And a lot of times it's the Republicans not thinking about it that are the ones that could be, I'm stereotyping, but a little bit more NIMBY than Democrats. But then unless it's all like their backyard.
All of it will be determined, I think, by the feasibility of some of these ideas. If the Harris campaign, if this hypothetical Harris campaign, if all of the kind of restrictive policies, like they're going after the rent algorithms, if that turns out to be a bust and is not feasible, like we kind of assume, and then all of their housing supply promotion gets, that's actually works, then maybe the Harris campaign would do great. But if the Trump campaign, if they have similar housing supply things and they're not even touching the real wage thing, then they may be great. But there's room for some for some real debate about this issue. And I'd be interested to see where they would disagree. A lot of them agree. I would wonder what the Trump stance is on rent algorithms and rent price fixing.
I haven't heard him talk much about it.
Yeah.
I again, obviously, Trump being from real estate, I just can't.
Yeah.
But at the same time, he's been kind of anti-big business in some cases, and can take a populist stance. And I don't think there's really any ideology that is guiding either of them.
Yeah,
they both flip-flop on many issues already, and so it's whatever they want to
and like
make up about
apart
themselves.
from where their like ideological purity for all stances, housing seems like this special category where, like it or not, people think the rules may not apply in the same way as other
that's very true. Well, strap in. We're not through summer yet, and November is getting closer.
Yeah.
A lot of changes. We're not leaning too hard into politics, but especially when politics are at the intersection of commercial real estate and multifamily and housing policy, it sits right in the center of kind of those macro discussions that are germane to the Gray Report. Trying to keep it a little bit light and fun to keep everyone entertained. Well, we'll have more updates on the next week's episode of the Gray Report. Make sure that you've liked and subscribed. Like this video, and then subscribe to the Gray Capital YouTube channel. There's a little bell icon. You get alerts. We keep adding more subscribers all the time. It's really great to see. If you're a new subscriber, thank you for the follow or subscription, whatever you call it on YouTube. Check out the website, graycapitalllc.com. Learn more about what we do at Gray Capital. The Gray Report's got its own website, grayreport.com. We've got the best newsletter in the industry. If you are multifamily adjacent, multifamily curious, you can. We don't judge. It's good. We're very tolerant, and we've got a newsletter for you at grayreport.com or graycapitalllc.com. Every Thursday it goes out 8:30 a.m. Eastern time, and then Sunday we give you a little digest as well of what's going on. It's been called the best newsletter in the industry, not from me, from other folks that are smarter than I. So highly recommend. Matt, great episode.
Thank you.
Have a great Labor Day weekend, everybody. I'm going to go see if we can get Miss May on the line and get this deal closed.
That's great.